I got tickled today. Got bottom ticked right here on my long position and got stopped with a break even. Eventually, as you can see, we just ripped higher. Let's break this down. So as with any trade idea, the first thing that we need is a bias. Are we bullish or are we bearish? And we determine that from the top down, starting from the highest time frames, working our way down. We look for bias using two concepts, order flow and candlestick logic. Order flow is the fair value gaps, where the pointing in candlestick logic is reading the individual candles for respect or disrespect of certain levels, key PD arrays on the chart. So on the higher time frame, we have been in bullish order flow. And when you are in bullish order flow, any moves below old swing lows, you consider those as stop hunts to want to continue pushing high. So that's exactly what's happening over here on the weekly basis. We are sweeping this weekly swing low and we are showing respect to it. This is where candlestick logic comes into play. Respect to it in the form of this candle. As you can see, we're showing a large low rejection, higher time frame wicks or lower time frame for value gap. So that on the lower time frame is showing order flow shifting from a bearish state to a bullish state. So price is respecting that discount array in the form of that weekly swing low. What do we do next? Price is going to likely seek the next premium array. And the only premium array that we can next seek is this weekly swing high, that buy side liquidity. So price is sweeping sell side to seek buy side. So all time highs is my draw on liquidity. My expectation for this last week's candle was for expansion. That's exactly what we got. This next weekly candle, bullish expansion. That's exactly what we're getting here. Bullish bias, pretty simple. On a daily basis, we are just working higher off of this daily for value gap. My expectation for today's daily candle was to expand higher towards the next premium array, which on a daily basis would be this swing high right there. Gorgeous stuff so far. Onto the 4 hour, we have this 4 hour bullish for value gap that we were inside of coming into the New York AM session. We displaced immediately off of that higher at the open, but that's fine. The draw was still higher, so I did expect follow through on that next 4 hour candle. Now that we have our bias bullish, we need our narrative. If we're going higher, where can we go higher from? So that's where I found this 5 minute for value gap right here that we can potentially push higher off. As you can see, there was a 15 minute for value gap down below, but it was a breakaway gap. So I didn't expect price needed to retrace all the way down there. I expected that to remain open, which is why I dove into the 5 minute right here as perfectly fine context to look for higher prices. So diving inside of that 5 minute for value gap, I was looking for my 1 minute entry function. And this is where I got it. This is where I entered. Once we saw that 1 minute fair value gap get created, I immediately market bought right here once this third candle closed. That is all I needed for me to know that we want to move higher. So I market bought right there, stop loss at the swing low bodies, and then I targeted a static 2R. Now it was at this exact moment that I showed my stop loss break even because we completed that context, we hit ERO, and that's a rule I have across every single trade, and it has saved me more times than not. But as you can see here, I got bottom tick, absolutely tickled, and this is what I learned from this. This is what I noted in my journal. Here are the executions, by the way, before I get into that, just proof that I actually took this. So I noted in my journal that the trail on this trade was a bit too aggressive considering where I actually entered. I market bought the bag right here, and it was in the upper quadrant of that boundary area. So it's a very reasonable area you can expect price to retrace into after seeking ERO. Like, if you really take a look at this, all price did is respect this fair value area, this break of this order block on the 1 minute, and beautifully continue pushing higher. Like, that's very expected, and that's very reasonable for price to do. You only should trail your stop based on areas that price has no reason to retrace to. And this had much reason to retrace to. So I think it was just too aggressive, something I'm going to change moving forward.